Good morning. Welcome to Stock Market Today for Thursday, October 24th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today to sign up for a free email. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were higher in Wednesday's trading, ending near the best levels of the day. Energy, materials, and comm services were the best performers. Treasuries were mostly stronger. The dollar was better versus the yen, but weaker against the euro. Gold was up 60 basis points, and WTI crude settled up 2.7% following an unexpected U.S. inventory draw. As we get to the desk this morning, futures are up 20 basis points. Busy night of earnings last night. Mixed to better would be the way to describe them. Looking across the board, treasuries are a bit firmer across the curve. The dollar is unchanged against the euro and the yen. Sterling a bit on the defensive. Gold is slightly weaker. And WTI crude is giving a little bit back here, down 30 basis points to start the day. As we look at the structure of the S&P 500, what jumps out at me, right, aside from the fact that we're still pushing on the string at 3,000, is they really could have sold them off yesterday, right? That Texas Instruments print could have been a good excuse to sell the market off. So they could have sold them off, but they didn't. Right, so key support remains around the 200-day moving average near 2870, slightly above that, 2872. And then the key level is at the August lows, still near 2820. We're still pushing on the string, as I say, at resistance near the 3000 level. Haven't quite been able to bust through in a meaningful way just yet. The RSI is holding bullish ranges at about a 57 reading, but Chaikin money flow remains on a bearish reading. So the indicators are mixed, although I will note that Chaikin money flow did see an uptick yesterday. The indicators are still mixed as the S&P 500 pushes on that 3,000 level, and we'll see if earnings reports out last night can give us a little bit of juice. Right now, not looking like we will, but we never know what's going to happen throughout the course of the day. Some good reports from Tesla and Microsoft last night. I have those stocks trading higher, but I will note that Twitter is down big in the pre-market here this morning. Now, as we look at our market in a minute, right, what are we writing about in the note today to Chaikin Analytics clients? Stocks rise despite the poor results from Texan, and I do think that that is important. Odds in our mind do continue to favor a break higher into the end of the year, and that's as breadth metrics improve across all time frames. We'll take a look at that. Banks show signs of increasing relative strength, and I do think that that's important, and it's also potentially part of that growth to value shift that's been playing out in the market. And as we said, futures do point to a higher open here today. Let's take a look at the power bars for the major indices. The Dow tacked on 15 basis points yesterday, but still skewed in favor of the bears. Three bullish stocks for 7 bearish stocks. S&P, 27 basis points to the good, 111 bulls to 88 bears there. NASDAQ, up 20 basis points, 21 to 20, bulls to bears. Small cap, slight underperformer on the day, but still has the best power bar ratio. 653 bulls, 346 bears. Slight uptick in the bonds on the day to send yields lower. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board, however, are mixed. Let's look at our stock of the day now. JetBlue Airways, JBLU, closed at 1888 yesterday, up 43 basis points after a big spike higher the previous day following a better than expected earnings announcement. Power gauge rating for JetBlue is very bullish due to very attractive financial metrics and very strong price volume activity. Stock does have some weak earnings performance, but when we take the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. So very bullish stock, strong trend, strong industry group, type of name we want to consider. But from a timing standpoint, we're not there yet. What we're watching for now is a personality change. And what is a personality change? It means when a stock goes from really underperforming the market to begin to outperform the market. Now, we're seeing signs of improving relative strength following that earnings report, right? But we're still an underperformer, right? So the very bullish rating met with a stock that's underperforming. At the same time, it is overbought based on our overbought, oversold indicator, and money flow has been persistently bearish for JetBlue, although we are ticking into positive territory here over the past couple of days. So a bit of a mixed bag from a timing perspective as far as JetBlue is concerned. We want to see relative strength improve, and we'd love to see an oversold condition before getting involved, but it is starting to look interesting, right? Lots of opportunities to add names to a watch list. I always think that that's a great exercise to go through and find names that could be changing character and monitoring them for an ideal setup. And that's the case with JetBlue here today. Let's add it to a bullish watch list. Hard for me to get excited from a timing standpoint today, but having it on a bullish watch list and keeping an eye on it when the opportunity does present itself, we will reevaluate. Turning now to our sector tracker, looking at the movement of the major sectors over the last 5 days. Energy's really kind of been a standout for the first 3 trading days of this week, and that's pushed it to the top of the list over the past 5 days. After that, it's really kind of a mixed bag, right? Real estate and utilities towards the top of the list, despite the basing in yields. And financials are there as well. Normally, these two diverge, right? And a lot of that is driven by yield. When yields were falling, it was a tailwind for the REITs and the utilities and a headwind for the financials. And if rates have kind of stabilized a bit, it's become a bit of a headwind for the bond proxies. But right now, they're all near the top of the list. So that's kind of interesting. Middle of the road, staples, healthcare, and industrials. And I think the industrials is an area where we want to watch if we are really going to see a cyclical rotation. At the bottom of the list, all down over the past 5 days, materials, comms, discretionary, and tech. Obviously, it's a big week for tech earnings. Yesterday was a bit of a bit of a headwind with that Texas Instruments print. The semiconductor names were under pressure. We're going to hear from a lot more tech stocks over the course of the week, so we'll continue to monitor how that group trades. But we really want to see tech outperforming to increase the odds that the market will break out of the range that it's currently trading in. So something that we're going to keep an eye on really closely. Our industry in focus today is the Regional Bank Services Group, which over the past 6 months has been an underperformer, but we are starting to see some signs of changing relative strength and a lot of that has been driven by the power bar ratio, which is very strong. 75 bullish or very bullish stocks in this group for only one bearish or very bearish stock. Currently ranked number 2 of 21 subsectors based on that power bar metric. It's moved down one slot over the past week. So some of the indicative names there that we want to begin to take a look at potentially. First Foundation, FFWM, with a very bullish rating. FNB Corp, ticker FNB, with a very bullish rating. And QCR Holdings, QCRH, also with a very bullish rating. And if we look at the fund that tracks this group, KRE, the ticker symbol, the regional bank ETF, it does have a bullish Chaikin Power Gauge ETF rating, and that's largely driven by these fundamentals within the model. Strong trend as the fund is above the long-term trend line. And what's really starting to jump out at me is the improving relative strength. Look at how much this was an underperformer relative to the market throughout the summer. And now we're starting to see the intensity of that underperformance begin to diminish. And that's an encouraging sign. We'll look for that to continue as the fund has a bullish rating. Now, it is overbought with bearish money flow, so it really is a mixed bag, but signs are pointing towards improvement on a relative basis. And we're going to take a look at a different bank ETF a little bit later in the show, which kind of really reiterates that point. Let's hit our trending names now. Yesterday's S&P 500 movers and shakers, our gainers and losers on the day, and a lot of this is going to be earnings driven, right? IVZ, bearish rating, but earnings print sent the stock higher by 7.8% on the day. Alexion, ALXN, a little bit of a special sit as they are buying somebody, but earnings sent the stock higher by 7.4%. ROL, Rollins, up 7% following their earnings announcement. AVY, 6.5% to the good on their print. And Thermo Fisher TMO is a very bullish stock that added over 5.5% yesterday following their earnings announcement. On the loser side of the board, there's that Texan, TXN, down on earnings and really down on their guidance as well, 7.5%. Chipotle, CMG, has a bearish rating. Earnings sent the stock lower. But it was really, I think it was more about the guidance that kind of contributed to that 5% decline on the stock. ADI and Maxim Nothing company specific on those names, likely down in sympathy with Texas Instruments. And General Dynamics, GD, down 3.5% following their earnings announcement. Now we're watching aerospace and defense closely as well. Obviously coming under pressure because of Boeing. But what's interesting is that A&D, aerospace and defense, had been a market leader, and we're starting to see some wavering relative strength there. So we'll continue to watch that group throughout the earnings season. Let's hit the charts now. On Thursdays, we look at market breadth, and we like to look at market breadth to give us an indication of the odds of the market continuing to either move higher or maybe, starting to fade. And what I would say is breadth metrics continue to improve, and it's really across time frames. Starting at the top of the chart, the percentage of stocks in the S&P 500 that are currently trading above their 200-day moving average is at 71%. When that metric is above 60, it's a sign that a healthy majority of the stocks in the index are in long-term uptrends, right? So to me, that's a positive data point for the market, and helps us reiterate the view that odds favor a break up and out of this consolidation. Now, the line in the sand is really 50. When we break below 50, as we did last fall, market tends to have a hard time, and you can kind of see that very, very clearly with what happened back in the fall timeframe. We broke above 50, held below it, preceding that precipitous decline in the market heading into the end of the year. On a more intermediate term basis, we can look at the percentage of stocks above their 50-day moving average, and that's at 66%. Call it 67%, if you will. Again, a healthy majority of stocks in intermediate term uptrends. The line in the sand on this one is 30%. When we dip below 30, the market tends to struggle. So far, we are holding in areas that, again, are indicative of the market likely breaking topside from this consolidation. And when we look at the advanced decline line for the S&P 500, in fairness, this is probably my least favorite breadth metric because it doesn't really give a consideration to the magnitude of the advances, right? If a stock is up a penny on the day, it's treated the same way as a stock that was, say, up $10 on the day, right? Up is up. As long as it was higher than yesterday, it counts as an advancer. But it is a positive data point for the market as it moves to new highs here. So when we look at breadth across timeframes, and if we really wanted to take it to a short-term metric, I didn't include it on the chart, but the percentage of stocks above their 20-day moving average also continuing to improve. So that's what I mean when I say across timeframes, whether we're looking at long-term 200-day, intermediate-term 50-day, or short-term 20-day percentage of stocks above those respective moving averages, they are all moving in the right direction. And on top of that, the advanced decline line is moving to new highs. So breadth metrics continue to improve. To me, that's supportive of a move up and out of the consolidation, especially when you consider seasonality around November and December. I wanted to take a look at the Qs here today because, as I said, the market had an excuse to sell off yesterday, and if we were going to see it, we would have seen it in the Qs. Now, the Qs actually closed near the high of the day. Despite that report from Texas Instruments, despite some weakness in the semiconductors, the Qs are still knocking on the door of all-time highs as well, above a rising 200-day moving average, similar to the S&P 500. The RSI for QQQ is holding within, bullish ranges above the 50 mark, but similar to the S&P 500 as well. Chaikin money flow is bearish. So this is an interesting group that we want to watch here, especially as we're continuing to get a plethora of technology earnings on the day. And now I said we'd look at a different bank ETF, KBWB, the Invesco KBW Bank ETF, breaking up and out of this consolidation. In a move that's confirmed by momentum, as the RSI has made a series of higher lows and is now trading near overbought levels. And if we look at this fund relative to the S&P 500 at the bottom of the chart there, we can see we've clearly broken this downtrend line and are sending high and are moving higher. So the fundamentals line up. Relative performance is starting to get there. I think you want to start to look at the banks. That's going to wrap it for today. I will be back here tomorrow. Have a great day, everyone.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.